Traders, Cousin Vinny coming to you from theclosingprint.com on September 22nd, 2019. In this edition of your weekend video newsletter, we'll discuss the indices all taking a break last week with the exception of the Nikkei and the Bombay Stock Exchange. Our indicators and oscillators are mostly mixed going into this week, so that would issue a word of caution to members thinking about trading this week. Focus on the sectors that are the strongest, which turned out to be XLU and XLV. The big cap tech names took a hit last week. Facebook and Microsoft managed to close higher for the week. Bond stock ratio is short-term bearish. It's been oscillating around the 65 period moving average on the weekly time frame. Junk and high yield corporate debt, however, are bullish and moving higher. So that's one of those mixed signals. NYSE is neutral to slightly bullish, and the Nasdaq is slightly bullish, both turning at the end of the day on Friday, despite the price conflicts that we saw, giving us another mixed signal. NYMO and NAMO are flattening out. That's just telling you that breadth is slowing. We're off extremes, but fewer stocks managed to move higher last week, closing about 1-to-1 for the most part. Put call ratio is neutral as well. US dollar was at 98.14, trading in a tight price range, which is also neutral. The yen bounced, that's a little bit bullish. And we had the British pound US dollar in a bullish trend. Bonds did bounce last week. We're watching for a follow-through or a failure. The gold SPY ratio was higher as gold did manage to push a little bit higher. It's bullish to neutral. Copper failed a descending wedge breakout, so that's not good for the economy. We really need to see copper move higher. West Texas crude spent 17 weeks below its 20-week moving average. Last week was the first time we saw it close above. That's bullish for equities if crude oil can manage to move higher. The heat map, basically about the same, a little bit more green. XLY, XLP ratio is neutral. We were looking for that to turn up, so we'll keep an eye on that this week. The energy sector was above the 200 period moving average, along with XLU and XLV, as we previously mentioned, with IWM showing an inside bar. That could follow through, while transports, consumer discretionary, and retail were lower last week. International markets look okay. We'll look at some IBD 50 names and some stocks showing above average volume in green. Finally, we see Bukowski with 405 red with the CPI signal green since August the 28th, moving from 83.3% to 80% last week with a few stocks moving lower. That gave us a bullish signal with 12 bearish patterns, 10 bullish patterns, and 190 patterns waiting for a breakout. The numbers in parentheses are the previous week's tally. Bottom line, we are cautious going into this week. We're looking for the stocks and the sectors that are showing relative strength for those absolutely adamant about trading the first thing on Monday. SPY weekly did manage to stay above that 294, 295 zone. This is where a major support lies. A move into that zone would most likely bounce. RSI is still above 50, though it is turning back down a little bit. There's a little bit of divergence here from these highs back in September, October last year to the current levels where we put in new highs. In addition, we see MACD with a little bit of a divergence as well. So MACD as a function of price needs to get a move on. We did have higher volume last week. Looking for the bulls to return into the seasonally strongest months of the year. We'll just have to wait and see how things turn out on Monday. Daily price action also gave us reason to be cautious. We did bounce towards the end of the week, closed at 298, the 236 Fibonacci from these pivot highs down to these pivot lows that we saw here at the end of August when buyers stepped up. RSI is still above 50. If we lose the 50 zone, look for a follow through to the downside with support at 295. The Nasdaq weekly did lose this pivot high that we saw back in April at 78.51. We closed below that last week. We do have a major support level at 7,700 that we broke above several times. Levels that we saw back here in September, October 2018 before moving lower into December. We do have some divergence with RSI dropping. MACD looks the same. So with the weakness in big cap tech names, we need to see some strength there if we want to stay bullish. Otherwise, we're most likely going to drift a bit lower before we can possibly move higher into the seasonally strongest months of the year. Tech really needs to perform along with semiconductors. The small caps didn't fare that bad. We did get rejected at overhead trend lines that we drew in from last week. RSI is above 50. It's basically been moving sideways, so there's not a lot of divergence here. We do have an inside bar on the weekly that stayed in the upper third, upper quarter of the previous week's price action. We'd like to see that move higher. We did see some buyers step up in the lower part of this candle from last week. We're looking for stochastic and MACD to continue higher. Notice MACD is above its signal line and 0, with stochastics rising. If small caps start to show some strength this week, we'll probably focus on the small cap biotechs and small cap energy names that populate the majority of the IWM. The S&P 1500 is one of those mixed signals we were discussing previously. The S&P 500, 400 mid caps, 600 small caps in one index still on a buy signal. Histogram is above 0. It did taper off a little bit. Do notice the low peaks from the previous weeks. We do need to see that continue to push higher if we're bullish. If this starts to drop below 0, look for short-term weakness in this particular index and the stocks therein. The previous chart of the S&P 1500 gives you a better sense of breadth, as those are 1,500 stocks. There are no mutual funds or ADRs, whereas the New York Stock Exchange does have 600 listings that are related to mutual funds and ADRs. So this is a little bit more skewed. However, we did see the NYHL producing taller bars into the end of the week. Each day we did have the NYAD, again a little bit skewed because of those mutual funds and ADRs, but that was at the highs. And we do have the New York Stock Exchange composite showing blue elder bars. I would have been more concerned if these were red starting out the week. However, this could go either way. Literally, after this move from the August lows up to September highs, we are consolidating and taking a breather, so that's actually constructive. If this starts to see some bearish action on Monday, then we'll reassess the NYSE in the short term. For now, we're waiting for confirmation. Volatility and fear did peak a little bit on Friday. We did have VIX bounce back above the 15 level by the close. We are still producing lower highs, and we are below the mean, the 50-day moving average, with price action on the S&P 500 showing that selling on Friday. If we look at all of the stocks that trade on the New York Stock Exchange, there are over 3,600 issues. We did see the cumulative advanced decline line for all 3,600 stocks turn lower midweek. So that needs to continue improving. I would think that it's time for a little bit of consolidation, maybe a bit further pullback before moving higher into the seasonally strongest months of the year. There again, we'll have to wait for confirmation. And of course, the reason why we are thinking this way is, notice the black line flattened out. NIMO and NAMO need to show breadth improving like it did back over here in the beginning of the year. For the most part, this looks like it's taking a breather. Most of the stocks that were expanding and moving above their 50-day moving average have slowed. So we'll watch for the NIMO and NAMO readings on Monday intraday to give us an idea if breadth is deteriorating further or if we could see a push to the upside, as we see the same thing on NIMO. So the takeaway is this is neutral to slightly bearish. We saw the New York Stock Exchange with those blue elder sticks signaling a pause or neutral reading going into this week. The bond stock ratio also giving us some mixed signals. The ratio between the 10-year bond and the S&P 500 has been oscillating around the 65 period moving average on the weekly time frame. A hint of a move higher gives us a short-term bearish reading. If this starts dropping to start the week, then we would be a little bit more bullish. While junk bonds and HYG, high yield corporate debt, continue to push higher, that's telling you investors are interested in higher yields since the Fed is dropping rates. Look for junk bonds as a measure of risk on or risk off to remain a risk on signal as this moves higher for equities. And watch the 10-year yield, which did bounce as we've discussed over the last 2 weeks. The last couple of times that happened in 2012 and 2016 were reasons to be more bullish into the months that followed. While longer duration bonds like TLT did see a reprieve from the drop we saw 2 weeks ago. Nice bounce last week. I know Susie and a few others were trading TLT to the long side. Congratulations. While the subtle clues may elude some, the longer term bonds versus the shorter term bonds looking like it's going to get rejected here potentially. If RSI does move higher and we do have a spike above the 21-day, I would change my opinion, but for now I'm looking for a rejection on the 1-3-year Treasury bond ETF. Additional factors that equity bulls or bears need to consider, obviously the US dollar, contained in a very tight price range last week. RSI oscillated right around 50, while MACD continued to drop, showing us that momentum has slowed. We're putting in a series of lower highs. If you hear the US dollar is under pressure and bearish this week, that would be another tailwind potentially for US equities, as the fear and safety trade gives us direction and confirmation. We can also see that in the yen. If the yen starts to bounce and follow through to the upside showing strength, look for the dollar to move lower as that Forex pair changes direction. That would be bullish for equities here in the US. All of this happening, of course, as the gold spider ratio trade is looking more bullish for gold in the short term as this ratio turns higher. Keep an eye on stocks like Kirkland Lake Gold, which did pop up on the IBD 50 again this week. And look for copper to find some support here. We need to see a higher low. We thought this wedge breakout would resume higher. That would have been a bullish indicator. It started out last week with a bullish candle at the Friday close, and then Monday came around and copper dropped dramatically back to the top of that trend line. So if you're an equity bull, you want to see copper moving higher in the short term as a leading indicator of economic activity in the construction industry groups. Finally, West Texas crude and Brent moved higher last week. It did close near the lows of the week, having moved back up near the $64 a barrel mark. Looking for a move higher in crude as confirmation that we can get a little bit more bullish with equities, following confirmation on the indices, of course. That said, some of the strength in crude oil is related to Middle East tensions, of course. So if we do start to move higher, look for small cap energy names to follow suit and move higher as well, along with some of the big cap names that started the week looking very bullish. The sector heat map did manage to remain mostly yellows and greens. There's a couple of Sectors that got red, restaurants and bars, did deteriorate a little bit. We saw a little bit of weakness also in building and construction, as we just talked about with copper. Real estate improved slightly, and we did see telecom as an area of potential focus as well. International markets look pretty much the same to start the week. Some of the sectors that we're watching, like real estate, managing to push a bit higher and not fail completely like we saw with transports, a sector that needs to continue improving if we want to be bullish. Equities, MACD's turning, and we did see selling all of last week. That coming after a nice bounce off the August lows up to the recent highs. Biotech is holding up fairly well. This is the small cap XBI, just below the 200-period moving average. A push above that, I would be looking at small cap biotech names this week. For potential focus, materials held up fairly well, moving sideways for the most part last week. And the communication sector was mixed, moving sideways for the most part. Despite the weakness in Netflix, RSI is still above 50. We had some offsetting gains in stocks like Comcast, for example, and Charter Communications. Energy held up well, sitting right underneath the 200-period moving average. Notice the volume on Friday with MACD above its signal line. And even financials managed to hold near the recent highs. Banks, we're watching those, investment brokerage firms, etc., giving us a neutral reading for the most part. Industrials, we made a big deal out of the fact that this broke out, but it did fail. So that's something to watch as well with the industrials like 3M, Deere, Caterpillar, Boeing, all big cap stocks that we want to keep an eye on. With tech in a sideways range for 2 weeks, holding above this pivot high that we saw in the middle of August. Testing the 20-period moving average with major support down here if it gets back into this price action and pulls back to the April highs. We really need to see technology pick up and show some strength. Staples held right near the 20-period moving average, XLP. We did see some selling on Friday. XLU, the strongest sector, continues to ramp higher. Interest sensitive as the Fed lowers rates. A lot of these interest sensitive utilities will continue to move higher. Notice the volume, not one red bar last week. MACD above its signal line. Healthcare looking similar, trying to push higher. Most likely sees a follow through this week as well. Watch the big cap healthcare providers and medical device makers, to name a few. Consumer discretionary, the one group that you'd want to see moving higher if you're bullish equities. Consumer spending has been good lately. However, we do see consumer discretionary failing the 20-period moving average on Friday. Volume was exactly the opposite of what we saw on utilities, with the MACD cross as an exclamation point. Major retail names didn't fare that well last week, so we did see XRT moving lower, back below the 200-period moving average. Looks like it's heading to the 20-period. We'd like to see some support and return to the upside. If you're bullish equities on the indices, we really need to see retail regain its strength and find some support here to start the week. And finally, if you're bullish equities or bearish, you want to see XLP, XLY ratio give us a confirmed direction. Right now it's neutral to slightly bullish. We did see at the end of the week some of these crossing over. So as this starts the week, we'll watch how institutions are positioning. If we start to see this rolling over and moving lower again like we did back in September, October 2018, that would be a caution signal and reason to get more bearish in the short term. Starting off the week with IBD 50, one of the things we'll be looking for are stocks that are above the 20-period moving average and climbing with RSI above 50. Adobe showing the opposite, price below. Markdown period, phase 4 with RSI below 50. When in the markdown period, we're starting to look for phase 1. If you've read my book, you understand that we need to see a base form and then a change in direction. Price action will get back above the 20-day moving average to start climbing. That starts phase 2. So we're looking for phase 1 right now, accumulation. We're not interested in trading stocks to the long side that are showing price action below the 20-day moving average. Arch Capital reflecting what we're looking for, a nice trend, RSI above 50, volume and support at the 9 and 20 period moving averages. At Laysian Team, following through, bullish price action for the past 2 weeks, RSI moving back above 50, volume confirming. We're looking for a follow-through to start the week. Boot Barn in the industry group that saw a lot of weakness last, with the retail group moving a bit lower, looking for Boot Barn to hold the 9 EMA. We saw these buyers step up right here at the 9 EMA. Look for a follow-through and RSI to turn back up as a function of price, along with increasing volume. Chipotle Mexican Grill, CMG, another name in the restaurants and bars consumer discretionary group, which saw bearish price action last week. Chipotle did manage to hold up above the 9 EMA, so we're looking for a follow-through here in a stock that completely baffles me how it can trade at this level and continue to move higher, selling burritos as its catalyst for annual sales and earnings. Comcast, one of those names in the group relative to Netflix, we did see stocks like Comcast showing a bit more relative strength. Didn't break down below the 20-day moving average like many other stocks, so looking at this relative strength as a potential candidate for a long in the short term. We just need to see a couple of bullish days to complete the trade idea. Copart, the company restores flooded vehicles and then resells them for insurance companies to help mediate their losses from insurance claims after catastrophic events like hurricanes, etc. Edwards Life Sciences and other names in the healthcare group, XLV, did see some relative strength. I'm not crazy about flat 20 period moving averages, but it did move back above its 20 period on Friday on above average volume. This needs to see some upside. Most I could see on this one is 227 on the follow through. RSI is trying to stay above 50. ESNT looking for a follow through in this company that offers private mortgage insurance and reinsurance for mortgages in all 50 states and DC. Annual sales and earnings continue to climb, the lifeblood of any company, with good IBD metrics suggesting that this would be a higher probability candidate on this breakout. We'd just like to see some follow through on Monday. Above average volume with earnings in the second week of November. Many of the REITs like EPRT and STOR moved higher last week. Interest sensitive names following through. $23 stock, not a bad position to have. Looking for follow through. Above average volume continues to come into the stock. Globant, GLOB, following through. Nice price action. RSI above 50. This company provides IT services with 40 centers in Argentina, Uruguay, Colombia, Brazil, Mexico, and Peru, showing annual sales and earnings increasing. Decent IBD metrics, relative strength line climbing, above average volume, and doesn't have earnings until the middle of November as a potential candidate for the week. As many stocks continue to show relative strength versus the markets pulling back, the big cap tech names having a bigger impact on most of the indices. We see Chinese names moving higher. Of course, these are susceptible to headline news risk, of course, but it did follow through. We did see above average volume on Tuesday, followed through on Wednesday and Thursday, closing at the highs on Friday after a doji. Buyers stepped up at the low of the day. RSI at the highs. I wouldn't buy it here. I'd look for a flag or a handle, potentially W-shaped pattern or cup. If a handle forms, most likely we'd look for a breakout above the 30 zone in the short term. InMode, Israeli company in the healthcare services group, looking for a bounce. We did see buyers step up at the 20-day moving average. Look for a bullish start to the week for potential trade on this one back up to the high 29s, maybe 30 in the short term. Innovative property, industrial properties, providing opportunities for cannabis companies to grow indoors under controlled conditions. That said, a lot of the cannabis stocks that we were holding last week, Canopy Growth, Aurora Cannabis, and Tilray, all got stopped out. Wasn't very happy about that, but that's what stops are for. So this one's sort of bucking the trend, looking for a follow through and a move above the 20-day. Eventually this downtrend will resolve itself. We need to see phase 1. This is phase 4 of the markdown period. Phase 1 is the base. Looking for phase 2 to start, where the moving averages start to turn up and we can capitalize on these trends. JCOM, J2 Global, this one's holding at the highs. Relative strength for the most part. This company provides fax and related services to companies around the globe. Kirkland Lake Gold, as we mentioned, gold had seen some activity that could suggest further upside, so watch KL this week. Above average volume, moving back above the 20-day. RSI above 50. Lululemon showing relative weakness. Drop below its 20-period moving average. This could see further downside if the retail sector continues with this bearish trend. RSI is right at 50. Could drop further above average volume on Friday. Microsoft, not keen on stocks that have a flat 21-period moving average. I prefer it when the slope is higher. That way we can buy pullbacks that follow through on the second day and look for higher prices with RSI above 50. RSI is above 50. I would like to see a breakout and get the moving averages climbing to give us a better edge and an opportunity on Microsoft going forward, with Satya Nadella doing a great job as CEO. The company did mention an increase in its dividend, I believe 14%, and a buyback of shares. NMIH, looking for a follow-through, RSI above 50, price above the 21-day, on above average volume. This company provides private mortgage insurance in 50 states and the District of Columbia. The lifeblood of any company is annual sales and earnings increasing, as we see, and really nice IBD metrics. We could see higher numbers here for EPS. Relative strength line climbing, above average volume. Doesn't report until the end of October. A potential trade going forward in the short term. Chinese education and tutoring stocks, New Oriental and TAL, holding above the 20 period. The trend is still intact, RSI above 50. Not my favorite setup, but we did see buyers step up at the 9 EMA last week from Monday until Friday, even with that pullback that we saw to end the week. So a safer entry will be a follow through and then a second day on Tuesday with a breakout imminent if it does do what we think it's going to do in the short term. PagSeguro, we had high hopes for this one a couple of weeks ago. It did fail the 21-day, bouncing back up, buyers stepping up. So at a minimum, we need to see it above the 20-day. I'd like to see Monday and Tuesday as bullish. Tuesday would be a safer entry. RSI would be higher at that point with a follow-through confirmation on Tuesday. Monday would be a little bit too soon. It could reverse and drop off like we saw with Roku last week, which did not confirm on Thursday and Friday. Thursday it held. Friday it did not. Got that downgrade with a resulting 20% move just on Friday alone. Money flow still above zero. Most likely will drop below zero short term, setting up this gap fill potential area for buyers to step up. But suffice to say, we need to see a second follow-through day. We got stopped out on Roku at a 127 on Friday, so took a little hit there. Wasn't very happy with it, but it is what it is. That's why we have stops and look for a follow-through day as a safer entry. Restoration Hardware last week broke out the previous week, consolidated those gains for the week, holding up at the 9 EMA. We did find buyers. Now the safe entry would be Tuesday after we close higher on Monday. If that should occur, RSI is overbought, showing muscle, so anything's possible. I'm thinking it's going to pull back a little bit more. We'll watch how Restoration Hardware sets up after that move higher on above average volume 2 weeks ago. RealPage, the company, offers software and associated services for the rental apartment industry group. Looking for this to break out. This is at the pivot zone, so if you're an IBD-minded trader, you're looking for the breakout for the pivot into the buy zone as your trigger on above average volume. As we see relative strength line climbing, annual sales and earnings increasing, and really nice IBD metrics. We'd like to see other names in the software group also moving higher, like Team, Microsoft, etc. Salesforce, another name in that group, in the cloud-based software, etc. It really needs to get above this zone on the breakout with a potential pivot high around 168 or so as the eventual target. We do see above average volume, relative strength line climbing, annual sales and earnings increasing with decent IBD metrics. Last week we saw relative volume intraday higher than we normally would see during that 11 to 2 o'clock time period that I always point out during the live stream sessions. Look for that relative volume to continue this week and potentially set up along in CRM. ServiceNow also looking pretty nice this week. Looking for a follow through. RSI above 50, volume increasing. Another cloud-based company in the software group, workflow automation for business administration, etc. Looking for ServiceNow to follow through. Here's the pivot breakout zone at 300, relative strength line climbing, annual sales and earnings increasing, and nice IBD metrics to boot, along with above average volume. SolarEdge, many of you trading this one last week, we identified above average volume. Relatively speaking, our vol was above 5 to 1, I believe, on Monday. We kept seeing volume throughout the week. A lot of you took profits into Thursday and Friday's peak. Congratulations. We mentioned trading this one earlier in the week, along with other names in the group. Store Capital, as previously mentioned, these REITs continue to move higher along with EPRT. Volume increasing. Looking for that follow through Monday, Tuesday. Relative strength suggests we could see higher prices in the short term, especially if volume continues to ramp higher. Stryker Corp looking for a follow through breakout. Notice the volume on Friday. Relative strength line is above 50 and flat at the present time. Beaver Systems, not my favorite when price action is below the 20-day, but it does show favor as volume increases, relative strength line is climbing. A push above the 20-day could signal a change in direction in the short term and something we might be interested in trading over the next few weeks. The credit card services and payment processing group did see some weakness. Looking for price action to get back above the 20-period moving average on these names before trading them. And we're looking to trade some of these names that showed up on the above average volume scan, those noted in green. And the stocks in white showing relative strength on the MarketSmith scans as potential candidates. This 100% volume screen shows me stocks that are moving on greater than 100% volume, as we saw with Acadia Healthcare pressing higher last week. It has earnings out the first week of November. Good annual sales and earnings increasing and decent IBD metrics. The EPS rating could get a little bit better, but XLV Healthcare Group has been showing strength last week, so maybe we'll see some follow through in these names. Also look at the pharmaceutical stocks like Merck. We saw that moving higher last week, along with Eli Lilly, Bristol Myers Squibb, Mylan, Pfizer, and a lot of the small cap names in this group, which saw relative strength. Even some of the small cap biologic and biotech names moving higher. Remember, IWM did manage to hold in an inside bar that could lead to a follow through. So if we did see that confirmation on Monday, look for those small cap biotech names, healthcare names, and energy names to move higher. Watch energy. That could also be a wild card this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on September 22nd, 2019. We will send out a watch list later tonight around 11, 11:30, 8:30 on the West Coast. So look for that in your inbox. I want to get outside and enjoy the day. The fall weather's here. Leaves are falling. I want to spend some time with the family. So get outside and enjoy the rest of your weekend. I hope this helps. Take care, and we'll talk to you soon.